All right, cool. So today is Friday, is December 9th, and what is this? Yeah, I received my thingies already. Yeah, I'll register a basic driver license on the 15th of December. But yeah, that's the plan. That said, this video is just, I think, part one of three in back testing and just recapping all the live trades that we have done so far, the potential live trades anyways. So I'm just gonna go quickly over on the 1 minute time frame, and then continue replay bar and forwarding from then on. So this one here, this one on November 7th, which is pretty far back. I'm not gonna lie, it's like a month back. Hold on, yeah, it's like over a month back. But yeah, this is 4 weeks ago on Monday. This is right. Let's see here. To the left has been broken some structure. On the left, see still bullish price. We still have Fibonacci areas we need to retrace. We have a 1 hour and 30 minutes OB here, which is nice. So price form that break. Price come up, breaks through this previous high, this like a structure here, previous high, and come back down once again to basically Fibonacci 50% from 1 to 0, and then see anywhere search from discount price, and this one matches up with the under 15-minute OBs. So here in this zone, then we can just search for any entry within the 5 minutes, honestly. So be lax about it. You don't have to, look and kind of have like this concrete block, anyways. But essentially, there are multiple entry zones in this area, so that's why waiting for it. If there's only one, then you can enter. But yeah, anytime just wait for a candle to close in. Basically, like the first candle push in to close within. Second candle to basically remain around that area to maintain it, and the third candle entry. In this case here, you are going to need to look for a confirmation or some sort of price pushing through. So in this case here, price push all the way through in this middle, and then just basically come up, down, basically forming two shoulders. Price break over here, so you can enter on this candle here, or just basically wait until the candle kind of pushes up and then enter a little bit higher over here. Now, to enter right here on this level is still a little bit far-fetched, if I'm trying to be honest here. And if we're aiming for the minus 27, then it's a little bit higher. So what I should think happen here is that this entry point, after it has formed these area here, this candle kind of pushes up, kind of enter just right there, just enter right there, maybe 5 pip stop loss or so, not too low, right? The 5 minutes OB is still here, so I would say enter around the 5 minutes OB starts anyways. So the stop loss should be a lot higher than what we initially want it to be. So aim for the first trade, so on the 3 risk ratio, and just take it off. That's pretty much it for the 5 minutes. But yeah, essentially price is kind of like retrace around, give us like a little bit of a signs, some signs that price is still gonna reverse. So here 3 minutes, nothing much. 5 minutes, price goes in. But yeah, it is pretty much dynamic, and essentially when it's in this 1 minute, 1 hour OB, we still see that even though there's no 5 minutes here, that's a 3 minute, and it matches up. So it's more or less like a dynamic level. Just wait until price gotta slow down and give us some sort of resistance. In which case here we see some resistance onto the downside. Um, just pushing price back up once again. So after price maybe left the zone and basically impulse up here, you can enter in the trade a little bit later, but we still reach a 1 to 3 risk reward ratio, which is fine. And then next up here we have the big circle, kind of like a back test. Now we have more clarity of how and why price moved like that and how we can trade more loose in terms of rules. So here, GU points, double tops and bottom, respect OBs and fib, technical, not an emotional pair, movements are clear and fast. Um, well, sometimes, anyways, most of the times, um, GU is more of a technical pair. This was I like this pair a lot. I try to move away from EU because EU is too diverse, like I said before, and all the strategies in there kind of get mixed up. GU is respect order blocks very well, and I like it. So with that said, this one here, after price pushes through, this Fibonacci is going to drag from the low to the high once again. In the middle here, we have void to filled, right? Which is why you see here price kind of pushes all the way down. You can see that, after this price push up, let's see if we have any structure here. I didn't mark it. There's no 3 minute structure. Let's see on the 1 minute is a significant, um, not too much, but this is a good leg pushing upside here. So I will consider a leg, and then price come up here, and again, this not retrace past the previous candle high. It continued down once again. Price come up. It's kind of like a mixed signs. Mixed signs doesn't really matter as much. It's not too concrete about it. But yeah, essentially after price swallow up every single one, every single thing over here, price pushes through, kind of achieving its goal of price, right? It kind of achieved the goal that has swallowed up all the previous inefficiency, and price pushes all the way up. It's pretty much swallow all the goals, and so it can have the potential to push upside once again. So when price pushes past minus 79, kind of wait for a level, because it's kind of like a deeper discount, right? A deeper level we need to be cautious about. Now this trade here, this is a loss. So price coming up, right? Retrace this area here. Now has broken through all this previous structure, right? We don't know where it's gonna, continue pushing price down or not, because this order block is still kind of maintaining it. And so when price coming back up here once again, we don't know whether it's gonna, continue both ways. At the same time, it can retrace around here, or so it can retrace around here. It kind of makes price in the middle. And here's the mistake that we have made on the trade, which is to base it off of a leg of structure. What we did here is that we based off of the recent form leg, which is really not that great. We need to base it off the overall Lego structure, like the actually order block on the leg and the push up, instead of the newly formed over here. We need to look to the left to the Lego structure to see if there's any order block or any signs, and I think this is a 15-minute order block. Price pushes through here, and then essentially what we see here, this trade here may or may not, but I can say for sure whether I'm gonna change my position on this trade, or whether I take a sell or not. Let's say this is a loss. And the mistake that we have here to the left is that we need to look for a clear transition. Essentially, when price has retraced down, it did not break through any previous structure at all, right? Even though it's a final destination, we have that definition. But on the left, we don't see any clear structure at all. We see price coming up and kind of retrace sharply on that, and price coming down and swallow up all this bullish candle. And basically, we need to look for a clear transition here as well, because prices have pretty much no structure on this push all the way down. So now after price push through, you see here broke to the previous low. Now we expect price to continue even lower, right? It broke to the previous low. Price coming back up, draw Fibonacci from the high and draw down to the low, which where this one? Yep, there we go. Yeah, this one here. So from the high to the low, 50% around there. So when price will retrace there, this is a 5 minutes order block here, a 1 minute order block here, and essentially we want price to kind of retrace that level. That's all. And then what you can see here is that we took a trade, a counter trend trade, riding the price up. So you can see price on the left here, some structure, some structure, some structure. Price can push up all the way here, and it kind of reached that level of 0.5 already. Kind of reached that level of 0.5 already. At the same time, we have that 5 minute order block as well. So this is a debatable trade. I would say it's really debatable whether this is a good 1 to 3 or not. But I would say, since I analyzed this one here, I would say this is a plausible to minus 27, pushing price upside to the level of optimal, I guess. But I guess the lesson here is just to take the trade whenever the opportunity present itself. So essentially, here you can see a potential trade as well. Like I want to say this is an applicable area, but essentially, if a trade is an area where you can basically continue to push down, and it is in the range itself, and it the opportunity represent itself and it looks suitable, just take it, because I've learned over time that if you don't take the trade, then it's just gonna keep going and it's gonna leave without you, even though it matches up later, and you may look up and look back and basically contemplate yourself whether or not to take that trade, whether it is meeting your criteria or your trading strategy or not. I still need to practice on learning to take the trigger and just pull it. um, you can see the lesson here from this trade area is that price that broke up, retrace the point five right in this 5 minute, right, all the reasons to take a sell right here. But you need to check, you need to have a good reasonable area for you to basically a confirmation when price retraces back up. So price come down here, coming back down, you can take a trade from here, retrace up to minus 27, which is very close. Price coming up there, kind of waiting for it to transition down a little bit. And you can see here, price, you can still argue that this is an area that shouldn't be, I say shouldn't really be taking a trade, but it's a double top at the same time. So this, you can see arguing that this is basically coming up and basically a double top as well. But this one is a higher high, this one is the lower high. I think when price coming back down here, you can take a trade, basically anywhere in between this area here. When price retrace kind of back down, just get your risk ratio just like that. Or you can take a trade from anywhere in between this area where it is a confluence, I guess. Is it like a confluence? So this trick candle here coming up pushes through to minus 27, and then kind of maintain that level. Price pushes down and then continue down once again, kind of like at the final destination. Your stop loss on this, if you enter right here, should be above this 5 minutes here. This candle I'm highlighting should be above here, so it should be stop out even if you enter in a little bit early. This one is just like a refined entry, kind of confluence with the previous Fibonacci. Yeah, price come up, maintain that level. Price come down and then basically retrace on there once again to have a better entry price, or not. You can just enter anywhere in between. It should be fine, anywhere over there, and like giving it some kind of room or dynamic area for you to take a breather. I would say, and your stop loss can be above this previous high. Doesn't need to go above, so that's lower than the stop loss too. And of course, at 1 to 3, take partials and then leave it running because it's more than the second trade already. And then continue on. Let's see here. This at 10:41. This session has a lot of structure, has a lot of range for us to back test. Price come back down after pushing through this previous leg. So coming through 0.5 here. You have a 1 minute OB, kind of respecting it very nicely as well. Respecting the 1 minute zone of interest. Um, yeah, we're still within this 30-minute order block. Price come through. Let's see, push through any structure at all. Little structure, I would say, very little structure. You can trade in within the range just because we have this 30-minute order block here. Just keep in mind, trading inside the range is still like a better deal, right? Trading in within the range, for example, here, this leg of structure, even though it has broken through, this is a continuation trade, but you can still want to take aim for any take profit in within the range so that it is achievable. And even so, if it reverses, you can still have your profit taken pretty nicely out of the game, so that you don't need to feel a little bit guilty about not taking partials. But yeah, aim for take profit anywhere in between the range, and to prevent these kind of situation from happening, right? You can just take a trade here and then say project it like that, right? It can or cannot happen because this is at the end of the session. So you can see on the 1 minute here, this is a high, this is a lower low. This one here kind of broke through the like a little few pips, like 1 or 2 pip or something. Yeah, like a few pips right there. Price retrace back up once again, and then we can have your stop loss a little bit over. What is that? I don't know what that is. Yeah, this 5 minute, though this 1 minute order block here is respected pretty nicely as well. But essentially, we wanted to have like a clear structure because there is more area of entry right above it, like multiple entry price right here. You can see 5 minutes, so that's why you see price kind of retrace back down when it's going into the 5 minute order block. But yeah, essentially this is another a level, and you can see here price broke by a very few pips, like just a few pips. But it counts, so price coming back up here, kind of retrace in the middle. You kind of want to project yourself here because this is a smaller trade. Let's see Fibonacci wise. Hmm, there we go from the high to the low, and then you're going to search for any optimal entry to just aim your take profit to match up with the Fibonacci. So 3 pips, 3.3, very close. And basically going into 1 to 3 risk reward ratio, so around there 70.5, and you can match up with the support resistance or the key level. You can mark up on the line chart as well, but essentially it's within kind of level of achievable, right? It's still 1 to 3 risk reward ratio, and you can take partials here, and basically it gets your stop loss right there as soon as it touches, and then basically ride the price down a little bit. And you can see here after that, price sort of reverses and then stop us out at 1 to 3. And from then on, just continue upside. And that is how just training yourself to trade within the range. So even if price reverses and then go your way, you can still kind of read the price. You can still have your profit in place, locked in. So you don't have to, have this sense of guilt or this sense of missing out, fear of missing out. Say, okay, so price is doing that. What did I do wrong? Right? And you try to tweak your strategy around that, but it's not really your strategy. It's the way the price move, and you need to have a range to take your profit. Have a range to have an area so that your take profit are kind of guaranteed to go in and out at 1 to 3. In which case here, you can see that all of these trades are 1 to 3 and getting stop out, 1 to 3 and getting stop out. As soon as it goes over there, you can take your profit or, get your stop loss right above there. But it's just essentially, if it retraces down, then it's retracing down. If it's a counter trend and it meets the 1 to 3, just take the whole 1 to 3. That's all. But if it's a continuation trade like this one over here or this one over here, you can just be kind of lax about it and have a little more stop loss lax about that 1 to 3 entry point. This one here kind of a bit lax because this is kind of like a continuation point as well. So it kind of lax about the entry, take some profit partials off, but this overall session here can stack up to 1 to 3, 1 to 3, 1 to 3, 1 to 3, so 1 to 12 or even more if you take like a trade, you know, precisely or something like that. Essentially, what it trains me to do is that if you see an opportunity, just take it, and over time, the experience will kind of condense it down into an actual experience in the market and how you can look at the market a different way. But yeah, that's pretty much it for this recap for Monday, November 7th. We have a lot to cover here because this is such a diverse session. I would delete every single one of these here just to, lower down the capacity of the loader, I guess, because now this is in the archive. I don't need to do anything else to kind of maintain it. It's on YouTube, it's on archive, so I can just watch it back. Every single thing here I can delete, just kind of like losing out all the processing of TradingView, so it doesn't need to load all the way back here, all these details. Yeah, it's just lax about it. On this order block, delete, delete. And I think that's pretty much it for that session. But yeah, with that being said, I'll see you tomorrow on Saturday. Saturday is going to be a hell of a day. Okay, so we're gonna back test a lot, and we have some free time off. We off Saturday and Sunday, so we're gonna do a lot of back testing and basically retracing back and being lax about our experience in the market, being lax about pretty much anything else, and just take the trade whenever there is a reasonable opportunity presenting itself. So we don't have to basically drag ourselves away from our strategy or from away to our way of perceiving the market. Because at the end of the day, it's not really about the fixed strategy. It's about the way you perceive and understand where price is potentially going, and how you can capitalize on that and taking the risk, because no one know where price gonna go. That's the thing, right? The future does not exist. It basically the consequences of today, of the action of the market that is forming at the moment. So that's why there's no one way market's gonna move. So you cannot, you know, drag yourself. You cannot really not trust yourself because of that. And you must, keep moving forward and just adapt to the environment. Just like everything else in life, you can't really fixate it to one thing. Eventually, it will change and adapt. Eventually, you get bored of one thing, or essentially, if your environment around you change, the seasons change, your body changes. Um, that's why you have to kind of like adapt yourself around the trend of the market and identifying that trend of the market, instead of continuing out the path of just you know continuing down the path of following one thing, one old set of rules. And it should work. But so it has a peace of mind, but at the same time the market is so diverse, and it is so volatile, and the movements are not to be predicted. Your strategy, of course, is not going to win 100% of the time, and that's all about it, right? It's a strategy, it's the set of rules you need to follow. The way it goes with the experience in the market as well. It's just the way you trade. It's just the way that you perceive the market, and that is a strategy in itself. That is basically a wonderful thing in itself. So yeah, that being said, I'll see you tomorrow on Saturday. More back testing. Today is our last day. Today, fuck, I can't even put my words together. Today is the last day. Finally, we can have some break off, and then, yeah, get back into work, and then just keep working on it. We still have another week on the FTMO challenge, kind of taking it more seriously. And yeah, with that being said, thank you for watching, and I'll see you tomorrow.